Welcome, everyone. Thanks for joining us in our cryptocurrency presentation. What a tremendous area crypto is. You have the opportunity to make a tremendous amount of money or lose your shirts. We like the make a tremendous amount of money better, but the IRS is really interested in you. So interested, they've made this their top priority. They even have something, and it sounds like an action adventure movie, Operation Hidden Treasure, where the government believes that a lot of people are forgetting to report their crypto or reporting it incorrectly or have all kinds of problems with it, not to mention the different accounting problems that go along with it. So what we're going to do is talk to you about crypto and the accounting and all the choices you have, because obviously we want you to make lots of money. We want you to comply with all the tax laws, and we want you to take advantage of all the tax benefits that crypto can provide to you. On that happy note, I'd like to introduce my friend and colleague, the head of our tax department, tax attorney and accountant, Cliff Capdeville. Cliff, take it away.
Thanks, Steve. So the big news this month, Biden announced his executive order on digital assets, and that was announced on March 9th. And it contained a number of proposed initiatives, and we don't have a lot of guidance here yet, but we can see where the administration is going. In general, the executive order is an attempt to kickstart the government's initiatives around protecting investors with regard to digital assets, mitigating illicit finance, increasing national security, reducing those risks associated with the misuse of digital assets, promoting safe and affordable ways to use digital assets, including potentially a U.S. central bank digital currency. That would be a digital asset backed by the full faith and credit of the U.S. federal government. So this is big news. This is the federal government at Biden's direction getting involved, not just in the regulation of digital assets, but potentially the creation of digital assets. In addition, last year we had the announcement of a national cryptocurrency enforcement team through the Department of Justice. And the National Cryptocurrency Enforcement Team will be charged with identifying, investigating the Department of Justice cases involving the use of digital assets in criminal cases. And this is a big deal. We've all heard the cyber ransom schemes. The DOJ is going to devote considerable time, money, expertise to coordinate with domestic and international law enforcement partners and other regulatory agencies to combat the criminal use of digital assets.
Well, Cliff, what happens if a client calls you up and says, look,
so, Steve, what an investor needs to know is that the assets, the digital assets, are being used for legal purpose, and that they are, we want to make sure that all of our clients are using well-established exchanges and that they're not doing anything that's going to make them vulnerable to any kind of criminal activity on the internet.
So if somebody is heavily invested in crypto and they need tax guidance, what would you tell them?
Yeah. So what we do is we will meet with a client or potential client and discuss what sort of businesses and investments they're making with the cryptocurrency. Are they active traders? Are they mining, staking? Are they running a business that accepts
Can you
cryptocurrency?
define that?
Steve, you're breaking up a little bit. Liz, can you hear Steve?
I just heard
Yes.
a whole bunch of static. It now went away.
Okay, good.
Okay, continue.
All right. So, Steve, another major initiative that the Department of Justice is interested in is really misuse of technology for production of fraudulent transactions, and this is something that we're making sure that all of our clients are monitoring and immediately reporting any breaches, particularly in regard to cryptocurrency, but in terms of their cybersecurity in general, we want to make sure that this is something on the radar of all business owners, whether they're large or small businesses, that they have some policy and procedure with regard to their data security and also with regard to their digital asset
Now,
transactions.
Cliff, when you talk about data security, I know there's all types of software around to help with this, but what software does the IRS use and what software do we use?
Yeah, so we're using the same software that the IRS is using this year, and that is, although there is no requirement currently for digital exchanges, digital wallets to create and report using Form 1099, like your bank or your brokerage, that the IRS is moving in that direction, and we use software to essentially match what information the IRS has. So we start with that. We also make sure that the investors and businesses accepting cryptocurrency are tracking all of the related expenses, transaction fees, gas fees, et cetera. Make sure that those are all reported correctly on the tax return and that the taxpayers, our clients, are not leaving any money on the table when they report the cryptocurrency transactions to the IRS.
And Cliff, when you talk about that, and here's where our accounting backgrounds are so vitally important to clients. As we know, the default in crypto is FIFO, but why don't you tell the audience what FIFO is and then how maybe they want to use a specific identification method instead? They could save them a lot of taxes.
That's right, Steve. Because the IRS treats cryptocurrency as property, you have the option with any kind of inventory, other property transactions, to treat it as specifically identified. So, for example, if I buy a tranche of Bitcoin and then later in the year I buy another tranche, if I specifically identify those, the basis could be different and it could be to the advantage of that taxpayer to specifically identify the purchase price of that individual Bitcoin when reporting the sale. And sometimes that makes a dramatic difference in the tax.
Yes, folks, let's explain how much of a difference that would make. The typical crypto transaction, you have many, many transactions. And the default FIFO, first in, first out, is where you match up your first buy as the first sell and the second buy as the second sell and so on. So suppose, for example, you sold some crypto for 1,000 and you bought it at 100. Well, there would be a 900 gain. But suppose you bought 1,000,000 different transactions and you had one of the areas where you spent 1,000. You'd say, well, okay, that's the one I sold. I sold the one that cost me 1,000.
Oh, Steve, you're breaking up a little bit here. Steve? Can you hear me, Cliff?
Yeah, I don't know if Steve can hear you.
I don't think he can. So I think we're having some technical difficulties this morning. Do you want to proceed?
Yeah, let me just finish, Liz, and then if you
Or
can
why
just,
don't we try it on Zoom?
It's just, well, we might want to use this recording. So go ahead and finish and we'll.
Yeah, Steve. Okay, you sound fine now, Steve, but you keep cutting out. Okay, so another important initiative, the federal government is they are targeting, in particular, the cryptocurrency cyber ransom. This has received a lot of press coverage, and the U.S. government, Department of Justice, is applying its anti-money laundering and anti-terrorism team to fight cyber ransom. And in addition to the Treasury, FinCEN enforcement has begun significant number of investigations. We saw the BTCE investigation 2017 and the Helix investigation in 2020. So the U.S. government in general is taking steps to improve the transparency with regard to the cryptocurrency transactions in general. And this is potentially an important way to fight these cyber ransom activities. They're also looking at third parties. So we saw in the SUIX investigation that an exchange was targeted for facilitating ransomware attacks. So we expect that the U.S. government is going after third parties, exchanges, the wallets, probably also accountants and attorneys that are potentially facilitating, making easier these cyber ransom attacks. A little bit about taxation of cryptocurrency in general. We have not a lot of guidance. We have some. The first bit of guidance we received was in 2014. That's where we first learned that the government, U.S. federal government, would treat cryptocurrency transactions as property transactions. What does that mean? Well, as opposed to fiat currency transactions like those with the US dollar, instead, the cryptocurrency is taxed. Gain or loss is recognized every time the cryptocurrency is sold or used to purchase any goods and services. It's very different from transaction with the US dollar. Obviously, you don't have to report a purchase with a US dollar, but you do have to report that as a taxable transaction with cryptocurrency.
And I think that's something that would confuse an awful lot of people, Cliff. They don't realize when they make that transaction, that can be a taxable event.
Absolutely. So, of course, if cryptocurrency is settled for cash, it's fairly easy. If the cryptocurrency has been held for more than a year, it's taxed at long-term capital gains rates, and less than a year, it's taxed at ordinary rates, just like other property sales. If you sell cryptocurrency at a loss, you're limited to netting that loss against your capital gain, or you can carry over $3,000 of that capital loss year to year in the future. What was surprising to many people, and what many users of cryptocurrency don't realize, is that whenever you purchase or pay for goods or services with cryptocurrency, you're required to report that transaction on your tax return. That's a taxable event. A lot has been made of the forks, the taxation of forks and splits. In general, the way this works is that if new crypto is created, it's going to be considered a hard fork, and that's going to be a taxable event. And if there's no crypto created, then that's not going to be a taxable event. But want to look at those transactions, make sure that those are reported properly on the tax return. In addition to income tax reporting, if you own cryptocurrency in a foreign account, you are also required to report those holdings on Form 114 and report those to the IRS on Form 8938. And that is something that we can help you with, identify which accounts are required to be reported to FinCEN, which are required to be reported to the IRS accounts. We got a lot of questions about NFTs and how those are taxed. The creation of an NFT by itself is not a taxable event, just like any work of art at its creation is not taxed to the creator. But a sale of an NFT is a taxable event. And for the most part, creators, NFT creators, are going to be taxed at ordinary income rates when those NFTs are sold. Good news for the NFT creators is all of their associated expenses are also deductible, and we can help you. If you're an NFT creator, set up an entity and make sure that you're capturing all of your deductible expenses to minimize your tax. We're also getting questions. A lot of people made a lot of money crypto in the last few years. They want to reduce their tax bill by making charitable contributions. Cryptocurrencies are eligible for donations, and if you've held that cryptocurrency more than a year, you're entitled to a deduction of its fair market value, and that create tremendous tax savings, as can be part of estate planning, part of a charitable gifting program, and can result in a lot of tax deductions for those who need those tax deductions. Couple new reporting requirements with regard to cryptocurrency. As I mentioned, starting next year in 2023, exchanges are going to be required to essentially issue equivalents to 1099. So they're going to report to the IRS the name, address, and phone number of all their customers, the gross proceeds they received from any sales, and whether or not those were short-term or long-term. For the exchanges, if they don't report, there's potential penalties involved, $250 per client and up to a $3 million penalty for each exchange for failure to properly report cryptocurrency transactions to the IRS. And similar to other currency transactions beginning next year, any cryptocurrency transaction, cash payment, more than $10,000 will be reported to the IRS. And with that, we invite you to contact Moskowitz LLP with any questions. Call us for a free consultation, and we'll be happy to answer all of your questions with regard to your cryptocurrency transactions.
Thanks very much. And folks, call us at 888-TAX-DEAL. That's 888-TAXDEAL, 888-TAX-DEAL, or MoskowitzLLP.com. And Cliff or myself or our other colleagues will be happy to talk to you. And like so many other things, this is an opportunity where there's so many tax advantages, but you have to know about it. Thanks for listening to us, and we look forward to seeing you next time.